Alright, so in this video, I'll just give you an overview of the indicator on what these levels are and how it works. Okay, so you might see when you just add it into the chart that you do not have any arrows. Well, there is a very valid reason for that. That is because there are calculations that are happening on the back end which calculate the most possible scenario where the market is going to move to, okay, as per the movement of the market as the chart is open. Okay, so if you open the chart wrong here, it will start calculating and saving data. As soon as it hits here, it will see the most likely situation, if the chart is going to go down or up, right? So it's going to give you a signal, and the sell signals you can expect above the red line, okay, and the buy signals below the green line. You can see here it says red line sell level, gray line standard level, green line buy level. So what are these levels? The green level itself is just like, if you are familiar with RSI or stochastic, it's something like that, but it's better in a way that it gives you a more visual and prominent look of where the market is going, okay? And the levels are not basically RSI or stochastic, okay, but you can use them here. That's why we show them here. If you want to make your decision based on RSI or stochastic along with the indicator, you are free to do that, okay? Now this here, what we call them are liquidity levels. This is level 1, level 2 and level 3. So the price, you can expect the price to go here, and this is the price would stay along here when there is a huge momentum, okay? So you would see the price come up and jump and go down, go hit the green level and then go back down. So that's where the price moves when there is a very bad trend. So you're not asked to take a signal when this kind of market happens, okay? This strategy we'll discuss later, but let me just not go away from the explanation. Okay, so we have a lot of information. This is one of the information that you get is an uptrend or downtrend information. So right now it says there is a global uptrend, right? So we can see that the buy deals are the safest here because this is an uptrend, okay? And if it's a downtrend, you would expect the sell deals to be safer than the buy deals. It's not always true, but 80% of the time your sell deals are going to make you more profit or are not likely to go in loss, okay? So there is some information which I would like to give you is, if you see here global uptrend correction detected or buy trend correction detected, for example, this was a very strong uptrend here, right? It is a local uptrend, okay? There is a global uptrend. What we would see global is something like this, okay? Now this is a local uptrend, all right? And in a local uptrend, there has to be when there is a trend up, there is a correction that comes, okay? This was supposed to be a correction which didn't really happen, okay? And there is a 80 to 90% chance that the market is going to go up like this a little bit and then fall down because the correction didn't really happen properly, okay? So that's one rule. If the correction doesn't happen, that's for your future information. If the correction doesn't happen, you can expect the price to drop down. Anyhow, so we see the road gives us really good direction of how the market is moving. This is a very bad movement of the market because right now I think there is a fight between where the price needs to be, okay, in an overall bigger level. This is 1 minute. Now right now there is a fight at higher levels, 5 minutes, 15 minutes or 30 minutes, or let's say 1 day or whatever the level that is. So people are not ready on accepting the basic price if the price has to go up or down. That's why we see this weird market, but we don't really care, okay? We mostly make a lot of money in these type of markets is the best, okay, because the price goes up and down. We just need to know how to take these levels and filter the false ones. Okay, so this level is for as I said, liquidity level second, and this is third. So when the price is above this is sell liquidity level 2 and 3. Now basic psychology behind these are, when there are people like smart money basically who have a lot of money, who shift the market, control their own way, do not buy here, okay, unless there is some smart money who doesn't care about the price, what price they're buying. Okay, there's a lot of factors involved, but mostly what happens is they would buy here or sell here. So imagine a stock market opens, you see this kind of thing happen again and again. Let me go, probably I'll show it to you. Let's say the London market opened here. So what they did was push the price up till here. Okay, as soon as the price went up, either the same people or the people who were waiting for the better price, so they wanted to price to go to an overbought level. Okay, so they pushed the price as soon as it went up to these levels, liquidity level 2. So their buy orders were here. Okay, so they started fulfilling and the price fell around 450 points. Okay, now this is a very strong movement. Okay, this did not happen in a session, this was apart from the session. This kind of thing happens also, but we already anticipated that because there was a huge movement of price down here, so we expect the price to go up here. Okay, the correction has to happen. For example, this is 1,000 points here, we expect at least 600 to go up. Okay, and if it crosses 600, we can expect that the trend, wherever the price moved more than the correction, so the correction would be 600. Okay, it didn't happen, it happened more than that. Now we can expect the price to move up again. All right, so that's basic. You can see RSI values here, so we do not have to put into the charts. Basic, in normally you would see something like this. You put the RSI here, you have this chart, you put stochastic, you have this, and then you put, what do you use? Mostly people use CCI. One second, where did CCI go? Yeah, here. Look at this. All we have to see are these values. Okay, if it is above 70 or 30. Okay, so these are the things that we need to know. Why do we have to have these open? We don't. One of the most important factors in trading is simplicity. If you have to look at all these things, you will never consistently make money, because you'll confuse yourself. Because if something wrong happens, you cannot come back from it. It'll take you too much time to do analysis and you'll fail. So that's why we remove all this and we just have these values. Okay, now the stochastic is 70. If it goes above 80 or whatever, you can change these values here. There we go. You can turn off the indicator arrows if you do not want them. You want to just use the liquidity levels in your trading. Okay, you want to use this, and you want to, have your own strategy along with this and not use the arrows. You're free to do that. A lot of the customers do that. A lot of customers and us also, sometimes we have different strategies which do not involve indicator arrows at all, right? So we are taking entries which are far into the future, not just short entries. So this is dynamic closure. So dynamic closure is, it looks at the market and it'll tell you stop loss and take profits according to the movement of the market, or how least likely the stop loss is going to be hit, and with the minimum amount of loss, and the highest likely level of price that's going to be hit. So you make a lot more profit than you make your losses. Now when we see that a lot of people are benefiting from, just some people are just using these values, right, and the road, the liquidity levels, and using their own strategy. Some are using both, right, indicators. Some are using all three, also knowing, okay, if there is a correction. Some are just, it just depends on what you want to do with it. There is like so many things. In future we have more than 100 features planned, and what we plan for it to become is one indicator to rule them all. Okay, so we'll have all the features. There are a lot of indicators which are being sold for 1,000. Okay, and even those features will be a part of Relicus Road for free. Our goal is to, you know, consistently provide value to people. If you're paying us monthly, it's our job to make sure that we take care of you. Okay, it's just that what we want. Okay, so anyhow, we look forward to having you in our community. Thank you for watching. Have a nice day.